Hello everyone, welcome to the Financial Information channel. In this video, I'm going to give you my top 5 stocks that you can buy with $10. So let's start with the video. In this channel, I do personal finance videos about the stock market and how to make money. So if you're new, consider subscribing. At any point of the video, please the video notes in the description below where I will have all the stocks listed mentioned in this video. Also, please leave in the comment sections below what was your favorite stock mentioned in this video. And before we start, remember this is just an informational video. Anytime that you want to buy, sell, invest, or trade under your account, that's going to be up to your decision. All the stocks mentioned in this video are under $10 for a reason. I was able to find stocks that have good fundamentals and in addition they have growth potential. Now let's start with the video, and the first stock is Lightpath Technologies. The stock symbol is LPTH. Now Lightpath Technologies develops, manufactures, assembles optical components, and they actually design the components as well. The company services several end markets, including the defense, in thermal cameras, medical like endoscopes. They operate globally and have manufacturers in the US and Asia. Now let's take a look at the fundamentals. We're gonna take a look first at the stock quote. So let's read the quote to see what is the stock price at this moment. So stock price at this moment is at $2.95. The market cap is at 71.14 millions. The beta is negative 1.59. The PE ratio is 32.78. The EPS is 0.09 cents. The 52-week high is $3.33. And now let's take a look at the forward PE. And the forward PE is $16.39. Now the stock actually has a good forward PE. Now let's take a look at the financials. Let's take a look at the balance sheet and the income statement to see if the stock has good financials. First, we're going to take a look at the net revenue. In 2013, it had 11.8 millions. 2014, 11.8 millions. 2015, 13.7 millions. And in 2016, 17.3 millions. In 2014, they have a negative 313,000. In 2015, a negative 750,000. And in 2016, they went positive. They had a 1.4 millions. And the EPS, they had 2 cents in 2013, negative 2 cents in 2014, negative 5 cents in 2015, and in 2016 they had 8 cents. In the balance sheet, they didn't have any cash in 2013. They had 1.2 millions in 2014, 1.6 millions in 2015, and 2.9 millions in 2016. Now in terms of liabilities, they had a short-term debt 3.6 in 2016, 61,000 in 2014, in 2015 218,000, and in 2016 they had 166,000. In long-term debt, they had 3,000 in 2013, 116 in 2014, and in 2016 they had 178,000. So actually they do have a good balance sheet. They are able to pay all the debt if they want because they have a lot of cash and the debt is actually really small. Now let's take a look how the company has done in this year, in the last 3 years, and in the last 5 years. Let's take a look at the following screen. In 2017, it had gone up 91.56%. In January, it went up 12%. February, 35%. In March, 16%. In April, it went down 1%. And in May, it went up 11.85%. And in the 3 years, it has gone up 120%. And in the 5 years, it has gone up 147%. So as you saw, the company has gone up quite a good amount in the last 5 years. Even in the last 3 years, it has gone up quite a good amount as well. And in the second quarter, they announced that they had a 38% revenue growth and the gross margin was at 56%. Those are really good numbers. Now, some of the lens that are under $10 that the company produces, that revenue grew up 151%. Now, in my opinion, the company has gone up quite a good amount, but it still has good value. Now, remember, this is a company that is trading under $3. So in my opinion, it's worth taking a look. However, keep in mind, any stock that is under $10 tends to have a lot of volatility in the stock market. Now, the next company really surprised me because I thought that it was going to be just like Pandora, and the Pandora has been a mess. It has gone out quite a good amount. Now the next company is Sirius XM Holdings. The stock symbol is SIRI, kind of like Siri from the iPhone. Now let's take a look at the company because the company has a good cash flow. Now let's take a look at the company in business, and I'm going to tell you the company in business because it's well known. The company provides satellite service in the United States. Under SIRI, they broadcast sports, comedy shows, entertainment, news, weather, traffic. They broadcast a lot of options. And how they generate revenue, they charge a user a regular fee so they can access those services. Now let's take a look at the stock price so we can get an idea what is the price at this moment. And the price of the stock is at $5.29. The 52-week high is at $5.53. The market cap is at 26.78 billion. The beta is 1.30. The PE ratio is at 33.6. And the EPS at 16 cents. And the next earning date is on July 24th. And the good news is that they pay a dividend which is 4 cents, which is about 0.73%. The forward PE is at $24 with 5 cents. So the stock actually has a good value at that price and even pays a dividend. Now we're going to take a look at the financials. We're going to take a look at the balance sheet and the income statement to see if the stock has a good value when you're trying to invest or to get some position in that specific stock. Now let's take a look at the financials. Now the revenue in 2013 is 3.8 billion, in 2014 4.2 billion, in 2015 4.6 billion, in 2016 5 billion. And the net income in 2013 373 million, 2014 493 million, in 2015 509 million, and in 2016 around 745 million. And the EPS in 2013 is 6 cents, in 2014 8 cents, in 2015 9 cents, in 2016 15 cents. Now we're going to take a look at the balance sheet. In 2013 they had 134 million, 2014 147 million, and in 2015 111 million, in 2016 213 million. And in the liabilities, the short-term debt in 2013 is 507 million, in 2014 7.5 million, 2015 4.8 million, in 2016 5.5 million. And the long-term debt in 2013 is 3.1 billion, in 2014 4.5 billion, in 2015 5.4 billion, and in 2016 5.8 billion. So they have a huge long-term debt, so they are able to operate because they have an excellent cash flow. And when you have that type of balance sheet, that's the only way they're gonna survive, because the balance sheet is below average in my opinion. Now we're going to take a look how the company has done in 2017 and in the last 3 years and in the last 5 years. Now let's take a look at the following screen. In 2017, the company has gone up 18.88%. In January, it went up 6%. February, around 7%. March, around 1%. April, it went down around 3%. In May, it went up around 6%. Now we're going to take a look at the 3-year change. It went up 50.92%. And in the last 5 years, the company has gone up 176.24%. So as you see, the company has gone up quite a good amount. Even with having that huge debt, they have an excellent cash flow. But now let's take a look at some of the items that the company has shown in the news. Now one of the news when I was doing research on this company is that Warren Buffett actually bought shares for this company. His company owns around 741,000 shares for this company. I'm going to put on the screen the correct number so you can get an idea. And as you know, Warren Buffett is the best investor of all time. So he saw something in this company because the cash flow is excellent. It generated 1.32 billion in 2015, and in 2016 it generated 1.5 billion in cash flow. And I didn't have an idea that people were paying for this type of services. They're paying around $10 to $16 for the monthly subscription. And the monthly subscriptions are great because that's continuing cash that the company is receiving. Now I like this company. This company is not going to grow a huge amount, but it's very, very safe. Out of all the companies that I'm mentioning in this video, this is probably the safest out of the group. Now the next company is ZIXI Corporation. The stock symbol is ZIXI. And the company offers email encryption and data loss prevention, among other services, but those two are the main ones. And the model is simple. It charges a user a subscription fee, which is around $20, which in my opinion is a little low at the moment, but that leaves room so they can increase that fee. Now let's take a look at the stock quote so we can get an idea what is the price at this moment for this stock. So ZIXI Corporation at this moment is at $5.86. The 52-week high is at $6.19. The market cap is 318.77 millions. The beta is 1.64. The PE ratio is 53.27. The EPS 11 cents. The next earning date is July 24, 2017. And the forward PE is $17.76. That forward PE is really good, even though the PE ratio at this moment is a little bit high. But now let's take a look at the financials for the company. We're going to take a look at the income statement, the balance sheet, to see if the company has good fundamentals. I'm going to mention the net revenues. In 2013, 48 millions. 2014, around 50 millions. In 2015, around 54 millions. In 2016, around 16 millions. And the net income around 10 millions. In 2014, 4 millions. In 2015, around 5 millions. In 2016, 5.8 millions. And the EPS is 17 cents in 2013. 2014, 7 cents. 2015, 9 cents. 2016, 11 cents. And the cash in 2013 around 27 millions, 2014 around 21 millions, 2015 around 28 millions, and in 2016 26.5 millions. And in liabilities, they don't have any debt. Now, as you saw, the company has good financials. It has continued growing up in revenue and in cash, and they're having debt. That's the most important thing. Now we're going to take a look how the company has gone up this year in 2017, how it has gone up in the last 3 years, and in the last 5 years. Let's take a look at the following screen. In 2017, they have gone up around 18.62%. In January, they have gone down around 3%. In February, they have gone up around 5%. In March, they have gone down around 4%. In April, they went up almost 13%. And in May, around 6%. Now, in the last 3 years, the company has gone up 72.57%. Now, in this screen, in the last 5 years, the company has gone up around 125.38%. So, as you saw in those 3 and 5 years, they have an excellent return. If you're an investor for that company, you made a lot of money during those 5 years. Now, I was reading the articles that this company has a deal with Google that they signed in 2014. And in 2015, they signed a deal with Cisco, so it has a good brand and revenue potential. The only thing, they need to improve their margins because $20 for a subscription fee is a little bit low in my opinion. Now we're going to continue with the video, and the next company is Mitek Systems Incorporation. And the stock symbol is MITK. Now the company, what it does, it has 8 patents for the software that they created. And the software that they have created is a mobile image capture and identity verification. And let me go over the details what that means. Now they are the creators. When you have a check, you can have that check, take a picture with your phone, and deposit that check into your bank account. Remote deposit capture has become the de facto for all the banks in the United States. And they recently celebrated their 1 billionth check that had been deposited through that software. Now, this is a good technology because who likes to go to the bank and wait like half an hour just to deposit one check? It's a hassle. But now let's take a look at the numbers. Let's get an idea to see if the software is paying off. First, we're going to take a look at the stock quote to get an idea what is the stock price at this moment. And the stock price is at $8.40. The 52-week high is $9.15. The market cap is around 280 millions. The beta is 0.61. The PE ratio is around 121. The EPS is 7 cents. And they reported earnings on May 1st. Now in this screen is the forward PE. And the forward PE is $23.33. Now the PE ratio at this moment is around 121. But the forward PE is only around $23. That is an excellent forward PE based on the current PE at this moment. But now let's take a look at the balance sheet and the income statement to see if the company has good values. Now let's go to the following screen. Now in the net revenues, in 2013 they had around 14 millions, 2014 around 19 millions, 2015 around 25 millions, and in 2016 31.7 millions. And in the net income, they lost around 7 millions in 2013. In 2014 they lost around 5 millions. In 2015 they had around 2.5 millions. In 2016 they had 2 million. And in the EPS in 2013 they had negative 26 cents, 2014 negative 17 cents, 2015 8 cents, and in 2016 they went down to 6 cents. Now in the balance sheet they had cash in 2013 around 23 millions, 2014 around 7 million, 2015 around 3 millions, and in 2016 they have around 9 millions. And in liabilities they don't have any debt. Now as you saw, it didn't have any debt and it has a good amount of money in the balance sheet. Now in the income statement, it went down a little bit compared to 2015. But now let's take a look how the company has performed in 2015 and in the last 3 years and in the last 5 years. Let's take a look at the following screens. In 2016, the company has gone up 36.59%. In January, it went up around 7%. In February, it went down around 5%. In March, it went up around 6%. In April, it went a huge amount, 31%. And in May, it went down 10%. Now we're going to take a look at the 3-year change. And in the 3 years, it has gone up 146.36%. Now in the following screen, you are seeing the 5-year change. And in the 5-year change, it has gone up 254.43%. Now as you saw, the company has gone up a huge amount in those 5 years. Even in the 3 years, it has gone up quite a good amount. The number of financial institutions that have adopted this company technology to deposit checks has grown up from 300 to 2,500. In addition, they recently announced their newest patent for the mobile deposit check system. I guess they're updating their system so it can be easier for the user and the financial institutions to make those deposits. Now as you saw, this company is very solid. It has gone up a huge amount in the 5 years, and I think the company still has room to grow. That is my opinion. And the next company is Hudson Technologies. The stock symbol is HDSN. Now the company operates as a refrigerant services company. It provides solutions to the refrigeration industry. Its products and services are used in the air conditioning industry, which includes refrigerant cells, consisting mostly of refrigerants. Now this company was one of the companies that I was really impressed, and I'm going to show you the numbers. First, let's take a look at the stock quote so we can get an idea what is the price at this moment. So the price is at $8.60. The 52-week high is at $8.80. The beta is 1.68. The market cap is $3.57 million. The P ratio is 24.57 and the EPS is 35 cents. They report earnings on July 31st and the forward PE is $15.09. So at this moment the PE is around 24 and the next forward PE is around $15. Now let's take a look at the financials. We're going to take a look at the income statement, the balance sheet, to see if the company has good value. Now we're gonna take a look at net revenues. In 2013, they had around 58 millions. 2014, around 55 millions. 2015, around 80 millions. And in 2016, they had 105.5 millions. And in the net income, 2013, they had almost 6 millions in the negative. 2014, they lost around 720,000. 2015, they gained almost 5 millions. And in 2016, 10.6 millions. And in the EPS in 2013, they had negative 24 cents. 2014, negative 2 cents, 2015 14 cents, and in 2016 they gained 30 cents. And in cash, in 2013 they almost had 7,000, in 2014 almost a million, in 2015 1.3 millions, and in 2016 they have 33.9 millions in cash. In short-term debt, in 2013 they have 15.4 millions, in 2014 6.3 millions, 2015 20.6 millions, and in 2016 they have around 199,000. In long-term debt, they have 4.7 millions in 2013, 2014 4.4 millions, 2015 4.3 millions, and in 2016 152,000. So as you saw, they have a little debt now. They were able to erase most of the debt and they have a good amount of cash in their balance sheet. And the revenue continues to grow along with the EPS. Now let's take a look how the company has grown in 2017 and in the last 3 years and in the last 5 years. And in 2017, the company has gone up 7.37%. In January, it went down almost 10%. In February, it went down almost 2%. In March, almost went down 8%. In April, it went up almost 8%. And in May, almost went up 15%. Now we're going to take a look at the 3-year change. And in the last 3 years, the company has gone up a huge amount, 211.78%. Now in the last 5 years, the company has gone up only 151.46%. And the number for the 3-year change was over 200, but the last 5 years was only 130%. Now that is still a huge amount, but as you saw in that income statement, they have been able to grow a huge amount in those 5 years. Now most analysts predict this company to grow around 35% this year and in the next 5 years around 30%. And they were able to acquire a contract with the Department of Defense, and the potential value is around 400 millions over the 10-year period, and the company revenue is around 86 millions, so that is a game changer for this company. And this one was probably my favorite stock. However, I didn't rank them based on what was my favorite, I ranked them based on the price. So as you saw, the first stock was the lowest price, and this stock is the highest price out of the group. Now, some of the questions that you may have is some of the stocks that I didn't pick. And let's start with the first stock that I didn't pick. And the first one is Chesapeake Energy. And in my opinion, when I saw the financials, it has a huge amount of debt. And the company relies too much on the weather. If the weather is really hot, the company is gonna go up. However, if the weather is a little bit cold, the company is not gonna go anywhere. That is like gambling in my opinion. And the second company that I left off is GoPro. And GoPro, in my opinion, is not profitable at this moment. It needs to find a way so customers can actually upgrade their camera, kind of like the iPhone does. But at this moment, the only plan they have is to trade in an old version to the new one. And that is not very enticing for customers because the upgrade potential is not there. And the last company that I left off was Fitbit. Now, Fitbit is like GoPro, however, their numbers for Fitbit is worse. I wouldn't touch Fitbit stock. It has gone up a huge amount in the last 3 years. And the bad thing about Fitbit is that it's competing with Apple. Especially now that the Apple Watch came out. Now most people are getting an Apple Watch so they can track their calories. And when you're competing with Apple, that is a huge problem in my opinion. Well, that is gonna be everything for the video. Please remember, this is just an informational video. You are in charge of either investing, buying, selling, or trading any of the mentioned stocks. And like I mentioned before, this is everything for the video. Please make sure that you subscribe to the financial information channel. I'm gonna bring you more videos about the stock market, how to invest in the stock market, and financial programs. In addition, don't forget to like this video, and of course I want to thank you once again for watching the video, and have an excellent day and take care, my friends.